Hi there, I'm Tyler Bollhorn. Welcome to the Stockscores market analysis for March 29th, 2010. We're going to jump right over to the trading desk at tradingdesk.stockscores.com, where we can go through a slideshow of charts that represent the major indexes, currencies, and commodities that I like to follow each week. This is the first exchange traded fund, the DIA, representing the Dow Diamonds, of course. And we can see that a long-term upward trend remains intact. If we zoom in on the chart a little bit, you can see what's happened more recently. We've had a great upward move over the last 2 months, and we are stalling a little bit over the last 3 or 4 days. So it looks like the upward momentum is waning, but it is still upward momentum nonetheless, and no reason to be bearish on this market just yet. Next chart is a chart of the Canadian dollar, and we recently broke through resistance on the Canadian dollar versus the US. This is an exchange traded fund representative of the Canadian US dollar pair. We've pulled back over the last 5 or 6 days, which is pretty typical when a market rallies through resistance. I think that the Canadian dollar will continue higher, although this pullback may last for a little while longer still. Long-term bullish, short-term hard to say. We may see a little bit more weakness before it goes higher. Next chart is of gold, and the gold chart is I wouldn't say a particularly good one. It is narrowing in price volatility, which means that investors are becoming more confident. But we've got a lot of resistance on gold. We've got resistance there, and then of course at the old highs. This is a chart typical of something that runs up too quickly, and then you get some profit taking and a lot of money comes out of it. I do like gold longer term, but I think short term it looks to be neutral at best. All right, oil is building a great chart pattern, and a lot of the oil stocks are also showing good patterns. I think that this will be the next lead sector of the market, but first we have to break out of this consolidation. Now, this consolidation pattern is optimistic. We are building confidence through this pattern, and the reason I say that is because volatility is diminishing over time, and as volatility diminishes, that implies that investors are getting more and more confident about the price that they have given to, in this case, oil. Now what we ultimately need is a breakout through the line of resistance on this chart. That has not happened yet, and so that's something we want to watch for, but that optimism is building, and we should get that breakout eventually. Next chart is the NASDAQ 100. This is going to be quite similar to the Dow. And again, we can zoom in to see that in the last few days we've sort of lost some momentum, but the upward trend line on this chart is still in place, and therefore there's really no reason to jump ship on it. And in fact, when I go look at a intraday 60-minute chart going back the last 30 days, that upward trend line is also still in place. The S&P 500, same situation, good upward trend long term, short term a little bit of loss of momentum, but no reason to exit yet, although certainly some reason to be cautious and watchful of what's going on. This is the chart of the TSX, the major Canadian market index, and we have been in more of a consolidation pattern, sideways trading on the TSX over the last number of months. We are sort of trying to get through that resistance. The market seems to have trouble, but when you factor in the fact that the Canadian dollar has been so strong, really Canadian stocks have also done quite well relative to their global stocks, because the Canadian dollar has held up, and therefore your real value if you are an outsider to Canada has been pretty decent. And finally, this is the US dollar index. We have had a couple of days of profit taking after a good rally last week, and I think that we will probably see it pull back to this upward trend line here, so expect the US dollar to pull back a little bit farther, but longer term the US dollar relative to the global currencies should do well. The only place where the US dollar is not really outperforming is with the Canadian dollar, which is keeping up to it. The Australian dollar is not doing too badly as well. Well, that has been the Stockscores market analysis for March 29th, 2010. For more information on the tools and services offered by Stockscores, I encourage you to visit us at www.stockscores.com. Have a great week in the market and trade well.